What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about silver, because the spot price is still laying low, and actually today it dropped down a little bit more. But we also have to talk about the Federal Reserve, because we're going to be seeing even more rate hikes today. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, come and join us in the Precious Metals VIP Club for giveaways, live streams, deal alerts, and a whole lot more. Going to be going live tonight at 7 p.m. Eastern Standard Time. Come hang out. And of course, make sure to go and get your 5 free stocks by downloading Webull and funding your account. Refer one friend, they're going to give you 10 free random stocks for the referral. Refer 2 friends by the end of the month, and they're going to give you a free share of either Starbucks, Apple, or Google. Everything will be linked in the description. So today is Wednesday, May 4th, 2022. The current spot price of silver, as I'm filming the video, is $22.41. It's down 11 cents today so far, or down 0.49%. Decent red day for the beautiful white metal. Spot price of gold is $1869.80. It's up $1.80, or up 0.1%. Very, very, very minimal green day for the beautiful yellow metal. And of course, the gold to silver ratio is in the 82 to 83 to 1 range. But of course, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. So today, I wanted to talk about a couple of different things. Of course, we're going to be talking about the silver. I wanted to talk a little bit about gold as well. Before we can even do that, I wanted to talk about the Federal Reserve and also do a quick recap of the job openings report that came out yesterday. And as you can see on screen, we have a nice little selection. We have a Buffalo round, a Texas round, a Florida round, a Sunshine round, a Peace Dollar round, an eagle carrying an American flag round, America, a 5-ounce Aztec calendar round, a 1-ounce American flag bar, America, a 1-ounce Westminster bar, a 5-ounce Sunshine bar, and a bunch of 90% junk constitutional quarters down there at the bottom. So I did want to talk about the spot price today. I did want to talk about a stacking strategy that I'm kind of focusing on right now. But before we can even get into the money, I think we need to first talk about the currency and what's going on related to the Federal Reserve. And even before so, I want to do a very quick recap of the job openings report that came out yesterday. So for those of you who do not know, or for those of you who didn't watch yesterday's video, I talked about how the job openings report was going to be released yesterday, which is when I was filming yesterday's video. I hadn't gotten the chance to get around to reviewing it yet, but the expected number of job openings was around 11.2 million. Now, before it was actually released, I personally didn't know what to expect. I was actually a little bit hesitant. I was a little bit nervous for the release because there was a small part of me that was thinking that the job openings were actually going to be plummeting, which isn't a good sign. That's not good news at all, because that means that businesses and companies are hiring less people. And if businesses and companies are looking to hire less people, that means that businesses and companies are going into retract mode. They're retracting, they're retreating, they're moving backwards, and they're trying not to spend money, especially not on hiring new people and paying new people. That wouldn't be a very good sign, because that would mean all these businesses and companies are pessimistic about the future, especially the near future and the economy and how much money is going to be flowing in and out of their businesses. That's something that I didn't know what to expect. But upon the release, as it turns out, we're looking at 11.5 million job openings. Like I said, I was a little bit nervous that it was going to be plummeting, but we're actually having more job openings than expected. And we're also having a large number of people quitting their jobs, and I know according to the headlines, that doesn't look good, and it's not good, but when you look into it, you can actually see that a lot of people that have been quitting their jobs these last couple of months have been quitting their jobs for better jobs. And also, there are a decent number of people that are quitting their jobs because their spouse is financially stable enough for only one of the two to be working, or they're quitting their jobs to focus more of their attention on a business that they started. So context matters, and also not for nothing, we don't have the unemployment crisis that we had last year. Right now, nationwide, most people are in either one of two boats. Boat number one is working and making way more money than they've ever made in the past, and they're spending like crazy, which is partially what's driving up the prices of everything. And boat two would be people that are also working but not making enough, and they're scrambling to make ends meet, and they're looking for more work. So we don't have the unemployment crisis that we had last year. People are working. They're either working and content or working and uncontent looking for even more work. So that's not something at the moment that I'm personally concerned about. But moving away from that, I also wanted to talk about the Federal Reserve, because once again, if you watched yesterday's video, you'll know I talked about three very important dates. One of the dates yesterday, another date today, and the other date is going to be May 11th, 1 week from today. We'll worry about that in another video. But I wanted to talk about today because the Federal Reserve is going to be meeting. Now, originally, the game plan was to raise rates, a whole series of rate hikes, little increments at a time, starting with 0.25%, and they were going to do 25 basis point hikes over an extended period of time. So the first one was about a month, maybe a month and a half ago, raised rates by 0.25%. This time around, we're expecting the Federal Reserve to raise rates by 0.5%, 0.5% for, to my understanding, the first time in over 20 years. And then we're going to be raising rates again in June, and according to the game plan, according to the strategy, that should, in theory, mean that we raise rates by 0.75%. I guess we'll see. But at the moment, we're expecting the Federal Reserve to raise rates today by 0.5%. If that ends up being more, then that could result in a pretty serious rug pull. But that's not something that I'm worried about. I personally don't believe they're going to be raising rates by anything over 0.5%. I think they're going to be sticking to the game plan, and I'm personally hopeful and optimistic, which, by the way, I know it's difficult to be optimistic about the economy and inflation during these times, but I actually am hopeful and optimistic. And the reason for that is because, as I've been saying in previous videos, of course we're seeing inflation right now, but we're seeing inflation for a variety of different reasons. And some of those reasons are temporary, or fingers crossed temporary, like, for example, supply chain constraints. That's not something that's going to last forever, just as an example. Another example would be crazy reckless spending, because like I said before, people have more money than they've ever had in their entire lives, and they're spending like crazy because this is not exactly the nation of high financial IQ. People spend like crazy, there's lifestyle inflation, and that could end up leading to a wage price spiral, which, by the way, for those of you who don't know what that is, it's when the employees or the workers have, I guess you can say, more control than their employers or their bosses. And when prices are going up, products in the store are going up, rent is going up, food is going up, everything's going up, but their salary isn't going up, they demand a raise, and they get a raise, and then they have more money at this point, and then they spend more money, which drives up prices even more, and then they demand another raise to match inflation, because inflation's on the rise, but their pay isn't, and it's just this endless cycle. It's called a wage price spiral. It's not good. We're not there yet, and hopefully we don't get there, and I don't believe we're going to get there, but that is something to take into consideration. Right now, a lot of people are trying to make ends meet, and a lot of other people are just living their lives, making the money that they're making, and they're getting by without a problem in the world. And then, of course, there is a pretty large group of people that aren't working, but if they don't want to work, then they can sit there in the dark with their lights off and starve for all I care. But I wanted to talk about silver as well, because I was thinking about it earlier today. When it comes to the spot price of silver, during these inflationary times, a lot of people might assume that spot price should be moving in an upward direction. And I actually said in a video just a couple of days ago that I wouldn't be a bit surprised if over the next couple of months, if of course we see inflation continue to climb, continue to grow, and continue to get worse, I wouldn't be a bit surprised if we actually saw the silver and gold start to strengthen. But right now, we're actually seeing silver and gold on the decline. Of course, gold is technically in the green at the moment as I'm filming this video at like 9:30 in the morning. God only knows what the rest of the day is going to bring us. And by the way, the stock market has been a little bit wacky as well. So before I get into the silver and gold, let me do a quick little reminder to go and get your 5 free stocks by downloading Webull and funding your account. Normally it's 2. They bumped it up to 5 for the next couple of days. So capitalize on that while you can. If you refer one friend to the app, they're going to give you 10 free random stocks for the referral. It's part of their advertising budget, and you can do this 10 times. Refer 10 people, they're going to give you 100 free random stocks. Time sensitive, so capitalize on that while you can. And of course, last but not least, if you refer 2 friends to the app by the end of the month, Webull's going to give you either a free share of Starbucks, Apple, or Google. Starbucks is currently about $75 a share, Apple is currently about $155 a share, and Google's about $2,300 a share. It's random, you get what you get. Webull link in the description. Now back to the silver and the gold. When it comes to these inflationary times, I was thinking to myself, if this keeps up, which by the way, it's been keeping up, so one would probably assume it will continue keeping up, at least for a little bit of time. I personally don't think we're going to get inflation to start inflecting down until probably the 3rd quarter of the year at least. Although core inflation is already inflecting down, food and energy is really just pulling everything in an upward direction. That headline number, the overall inflation number, that continues to climb. I don't think that number is going to move sideways or move down until at least the 3rd quarter of the year. So with that being the case, one would assume that silver and gold should be strengthening during these times. But I think the market is pricing in a lot right now. We're getting hit from all angles, and I personally believe that most people are looking at the Federal Reserve. And when I say most people, I'm talking about investors for the most part. I'm not talking about the average person who doesn't even know what the Federal Reserve is. They're just sitting there watching TV, eating Doritos all day. That's not who I'm talking about. I'm talking about the people in the stock market. I'm talking about the people in the precious metal market. I'm talking about people in the real estate market. I'm talking about those people. I think a lot is being priced in right now, and I think a lot of people see that the Federal Reserve raising rates already did one. We're doing another one today. We're doing another one in June, and we're going to have an entire series of rate hikes. And I think that people are pricing that in. I think people are pricing in that inflation will be tamed. I think people are pricing in that inflation will come down. And I think that's why a lot of people are diving back into financial offense mode rather than defense mode. I think that's why we're probably seeing the silver and gold move in a downward direction. I think right now people are less fearful than they were a couple months ago or a year ago or 2 years ago. I think right now people are more confident that things will get under control and that things will begin to stabilize. Because if things do begin to stabilize, then yeah, I would assume that the silver and gold would go down, according to the spot price at least. That's just my opinion. That's just what I believe. I think during times of economic stability, silver and gold are probably less appealing, especially silver. And when times are rocky, during times of economic instability and financial hardships on a large macro scale, I think that's what makes the precious metals far more attractive, especially gold during those times. Gold can provide quite a bit of stability during times of instability. Silver, obviously much more volatile. It's a little bit more up and down. I consider silver to be the opportunity metal for a reason. I think it has far more room to grow and perform over time. It's currently not even halfway to its all-time high. Gold just hit an all-time high, I think, last year. Silver has quite a bit of a ways to go. Gold is down a little bit from its all-time high. Silver's down a lot from its all-time high. So for each metal to go back to their all-time high or beyond their all-time high, gold would only really need to go to about $2,200. Keep in mind, it's only a hair below $1,900 right now, and silver would have to more than double in value according to spot price. That's why I consider silver to be the opportunity metal, because I think it has far more room to grow and perform over time. Gold I consider to be the powerhouse metal because it's just what I consider to be the ultimate form of wealth preservation, and it's far more stable, far more slow moving, by the way. Pros and cons, gold moves in an upward direction much more slow than silver does, or much more slow than silver can, especially if they were both acting in a really explosive manner. But guess what? When the tables are turned and silver tanks or heads in a downward direction very, very quickly, gold will probably move in a downward direction as well, but much more slow and probably a far less deep of a cut, if that makes sense. Those are just some of my thoughts. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to the Federal Reserve, obviously by the time this video comes out, we're already going to know what the Federal Reserve has done. This video should be coming out around 5:30 p.m. Eastern Standard Time. We should have already found out a couple of hours ago, but remember, I'm filming this video at like 9:30 in the morning Eastern Standard Time. But let me know your thoughts on that. Come June, when the Federal Reserve raises rates again, do you think that they're going to be raising rates in larger increments than expected? Do you think that there's going to be a rug pull in any way, shape, or form? And of course, when it comes to the silver and the gold, what are your thoughts on me calling silver the opportunity metal and gold being called the powerhouse metal? Would you agree with me on my stance right there? Would you agree that silver offers probably more of a growth opportunity while gold offers more of a stability opportunity? Which, by the way, I don't think one is better than the other. You got to have growth and you got to have stability. So if you're stacking both simultaneously, even if you favor one over the other, I think you're doing yourself a massive favor, and I think you're going to thank yourself years, potentially decades down the road. So head on down to the comments and let me know anything and everything related to today's video topic. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs, and a lot of the products are helping us raise some funds and awareness for different charity organizations, by the way. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month. Live streams multiple times a week. I will be going live tonight, 7 p.m. Eastern Standard Time. Come hang out. Deal alerts on silver and gold almost every single day. You can watch all of my videos early and commercial free. And every Saturday morning, I post a brand new adventure vlog. And there are a ton of other perks as well, by the way. VIP Club link in the description. I guarantee you the value exceeds the cost. And then, of course, last but certainly not least, make sure to go and get your 5 free stocks by downloading Webull and funding your account. Normally it's 2. They bumped it up to 5 for the next couple of days, so capitalize on that while you can. You can deposit any amount, even as little as a penny. It still works. You still get your free stocks. I know, because that's what I did. If you refer one friend within the next couple of days, by May 11th, they're going to give you 10 free stocks for the referral. Super time sensitive, and it's part of their advertising budget, by the way. Rather than wasting currency on billboards and TV commercials, they'll reward their users for helping them build their app with them. And you can do this 10 times. If you refer 10 friends, they're going to give you 100 free random stocks. So capitalize on that while you can. And of course, if you refer 2 friends to the app, by the end of the month, Webull's going to give you either a free share of Starbucks, which is worth currently about $75 right now, give or take, or a free share of Apple, which is worth roughly $155 right now, give or take, or a free share of Google worth roughly $2,300 right now, give or take. It's completely random. You don't know what you're going to get, but you get what you get and you don't get upset. You win either way because you get something no matter what. Webull link in the description. Time is running out. Don't pass up on an opportunity. If you don't want the stocks, go and get them anyway. They're free. Sell them. Congratulations. Now you have the cash to go and get you some silver and gold if that's what you want. Webull link in the description. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything shared in today's video? When it comes to the job openings report, was that good news or bad news through your eyes? More job openings than expected. Then, of course, when it comes to the Federal Reserve, raising rates today. By the time you're watching this video, it's already done. Let me know your thoughts on that right there. And the next rate hike that we're going to be seeing in June, what are your expectations for that? And then when it comes to the silver and gold, What are your thoughts on the spot price moving in a slightly downward direction right now? Do you think people are pricing in that the economy is going to stabilize and inflation is going to eventually come back down, hopefully sooner rather than later, and we'll kind of return to a state of normality, hopefully by the end of the year? Do you think that's what people are pricing in right now? Do you think that's why people are kind of not so drawn to the metals at the moment? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.